Hi and welcome to our Market Insights for November 2017. I'm Aaron Upcroft. I'm here with Rob Gilmour.
Afternoon, Aaron.
Afternoon, Rob. Well, we're at the end of a year.
Wow.
Strangely, it's gone so quick. But how about we have a look back at and recap about the year that's gone, some of the predictions we made back in February, and let's just see how we've performed. What do you think?
Let's go through it.
Okay. So, first thing, interest rates. I'm pretty sure we were saying back then that we were at the bottom.
Yeah, I think we're still hovering around the bottom, don't you?
I think we're pretty close to saying that we'll bang on with that one. We're at the bottom. There hasn't been any real major movements either way. So, yes, we are still at the bottom. That's pretty much my view. I assume yours is the same.
Yeah, look, it's interesting. I think last year I thought, well, maybe bottom for a year, but I look at it this year and I think it's probably going to continue to stay low for a little while yet, maybe towards the end of next year.
Yeah. And look, we did say earlier on that also about fixed rates and there's been some changes. There has been some changes and that's been, a common theme throughout the year. But again, everything's still relatively stable. We're still sitting down at the bottom. There's still great rates and things on offer. So
yeah, I think fixing rates is still a good idea. It was still a good idea 12 months ago and probably is still.
Yeah, sounds good. Property market. Okay, so I'm pretty sure that we were talking about property market getting to being at the top of the cycle. Yep. Your view first?
I think we were saying it was the peak of the property market, probably a couple of months too early at the time, because we really did see things go a bit crazy there before Easter. But I think that theme certainly played out through the rest of the year, that things have started to cool off, particularly in Sydney. Yeah,
we've definitely seen a cooling effect. Yeah. So that's started to happen. So yeah, I agree. There's been a little bounce here and there, but ultimately there's been some cooling. It's what we expected. Yeah. Well, I think we expect some more.
And I actually think it's a good thing.
It's a good thing. I agree completely. So shares. Your gig? Tell me a bit about.
Look, I think at the time we were looking at company earnings, starting to come through stronger in Australia, and they've been strong in the US for a while, and that should lead to a stronger share market, and we've seen that in the US, and we've also seen that in Australia, and just recently we went through the 6,000 barrier in Australia for the first time in 10 years. So we set a slightly stronger share market, and that's what we've got.
Yeah, great. Look, I think we're doing okay prediction-wise.
Yeah, we can predict the future, can't we?
What about the Aussie dollar? How did we go on that?
I think I predicted that no one could predict the Aussie dollar.
Great prediction, Rob.
Yeah, look at. Always a hard one to get, but I think at the time we were talking about commodity prices keeping the Aussie dollar strong because we're exporting more, but eventually interest rates being higher overseas than they are here in Australia would eventually start to turn that, and really Aussie dollar's at the same level as where it was back in February, but we have seen it peak to 80 cents and come back down. So where to from here is an interesting one.
We'll talk about that one in February, shall we? Now, that's been the main indicators throughout the year, but what about some of the key moments or events that have happened throughout the year? Because I know that regulatory changes on my side have been a key event that's happened throughout the year. Lots of changes regulatory-wise on the mortgage markets that have meant that it's been a bit of a shifting landscape across the board. What about on your side as well?
We got through 1 July and the changes to superannuation.
That's right, the super changes.
So hopefully it's going to be quieter on that front. I think, for governments to tinker even more in that space or to beat their own peril. So bedding down those changes, they do have wide implications, and I think, some of them are still being understood. But so a big year in terms of that, and hoping for a bit more stability going forward.
Yeah. And world events, you were good Trump, bad Trump at the start of the year. Yeah. How did he play out with world events?
I don't think we knew at the time. Do we know now?
Who knows? But world events in general, Trump aside.
Look, I think it's interesting. I think we've seen bad Trump, and a soap opera. Yet the world just keeps turning around, and markets continue to go up. I think the big thing around Trump and what he can do to financial markets is the tax reform, and it's anyone's guess in terms of what might happen in that front. So,
sure.
Still very unpredictable.
Sure. And where does this place us? We'll talk in February about the new year to come, but where does it place us as a bit of a roundup and maybe as a snippet of what's to come start of next year?
Yeah, look, it's interesting. I think if you'd been living under a rock for 5 years and you came out and then just saw the world economy as it is now, the US is doing well, Europe's done a lot better than we thought, China's doing okay, Japan's even growing. So the world economy is doing well, employment's picking up. We're starting to see some wages growth and inflation coming up in the world as well. And I think if you came out of that rock and saw that and then looked at the level of interest rates, you'd go, well, that's just not right.
Yeah.
So I think we do need to see, or will see, higher interest rates, and that's obviously going to create some disturbances in markets. But
that's not unexpected, though, right?
Not unexpected and part of the cycle.
Yeah.
And I think the important thing to note is it's difficult to foresee a recession around the corner. So things are generally pretty good. We're probably mid-cycle in terms of that. So, but certainly changes around the interest rate setting, I think.
Yeah, sounds good. Well, that's our market insight for November 2017. We'll see you again next year.